So friends, as mentioned, we are going to discuss another straddle today. And as you know, straddle को trade करने का there are more than one ways of trading straddle. It depends upon individual's risk appetite, his time on the screen, and there are plenty of ways of making profit from a straddle. So there is no best or bad way of doing straddle. I have come across something which works for me, so I am sharing with you guys. So anybody can test it and see what they can do or improve this. Any improvement suggestions is welcome. So let's start. So what we will do here, that we will sell a straddle at 9:20 in the morning after 5 minutes of market opening. So let us say that Nifty is trading at 17,000 spot. This is on spot level basis, not on future basis. So what we will do, we will be selling CE of 17,000 and PE of 17,000, right? So this is the straddle sold at 9:20. The next point comes, what do we do with the individual legs? Do we put the stop loss or any target for the legs? The answer is no for this particular strategy. We don't put any stop loss or any target at the leg level, right? So I'm making it green, whatever we have discussed. We keep a straddle target of 550 rupees, and we keep a stop loss of 1050. Yes. You must be wondering, this is a bad risk reward ratio. No, it is not so. See, in option selling, the risk reward ratio on trade level basis is something which is different than the stocks or the futures. So we will discuss why this risk reward ratio is not bad going forward in this video. And once the target or the stop loss is booked in that particular strategy or that particular trade, what we do a re-entry after 5 minutes, right? Okay. So suppose now we entered at 9:20 on a strategy at 17,000, and after say 1 hour at 10:20 the target is done, or for that matter the stop loss is done. So at 10:25 we will be entering the second trade for the day, and suppose the market is at 17,100 at that point of time. So what we will do, we will enter a CE of 17,100 and PE of 17,100, and we will do the same treatment as we have done with the first counter as well. Sorry, 17,100, and we will keep repeating this cycle throughout the day. So these are the settings of selling the straddle and the process. Now let us go to the backtesting. See, backtest can be done in any platform. You can do it in ME Broker if you know the ME Broker coding. You can do it in some other platform. You can do in StockMock. StockMock, it is not possible to do the test because they don't have this reactivation after 5 minutes or 10 minutes feature as of now. So there's a platform called TradeTron where you can backtest it. I have been active on TradeTron for some time now. I was doing only strategies for myself and few of my clients privately, but now I have started sharing some strategy on marketplace as well, so that traders who are new or who are still learning the coding and all. Coding is very simple in TradeTron. Basically, it's not coding. We should not call it coding as such. It's a very simple condition-based logic where anybody can input the data. So this backtest is from TradeTron. So let us analyze. The capital required is 1,25,000 without any hedge for Nifty straddle. The backtest has been done for a period of October 2020 to March 2022, the very latest month. So in this period of 17.5 months, the strategy has given 1,92,000 rupees as gross profit, with a drawdown of around 5%, 4.96 to be precise. Standard deviation is 0.18%. It's pretty good. and the Sharpe ratio is 5.81. Anything above 5 is considered to be a good Sharpe ratio. If you see here, we don't have a losing month out of these 17.5 months. There is not a single month which has ended in negative at a gross profit level. These are the number of trades and the P&L percentage. So what I have done, I have taken this data into Excel to understand it better and do some analysis. So let's go on the Excel sheet. Here it is. So the first three column is, or four column you can say, A, B, C, D is same as in the backtest report taken from TradeTron. Okay. From next column onwards, I have added few things myself. Like number of trades in TradeTron, what does it mean basically? Say suppose in October, we have 172 trades. See, when we do a straddle, we have two entries for sell, CE sell, PE sell, and we have two entries for exiting the trade, one CE buy, one PE buy. So total 4 trades happen. So in TradeTron, 4 trades comprise of one counter basically. So one trade is equivalent to 4 trades in TradeTron. So when we say 172 trades in October, it is 172 divided by 4, that is 43 times the straddle has entered in this particular month. I consider 20 days on an average trading days for a month. So basically 2 trades or 2 counters per day. So this I have done for each and every month. So you can see from here that the number of trades are not very high as we could have thought initially when I said that it's a low profit booking, low stop loss and reactivation in 5 minutes. One could think that the number of trades would be more, but trade number उतना ज़्यादा नहीं है. It ranges from 2 to 5. Only 1 month has got 6 trades in February 2022. That was a good month for traders, for the option writers. So number of trades has been more. If you see over a period of 17.5 months, there are total 1356 trades, which comes to around 3.87 trades or counters per day. Let us say 4 counters per day, which is not big number. Next come the expenses, which is a very important parameter for calculation of profitability of the strategy. So basically I have taken 8 rupees per lot per side as the expense, which is reasonable across all the brokers, whether it's 0 broker or 5 rupees per lot wala broker. It is not applicable for brokers which charge 20 rupees per lot or something like that. So this comes to this is the expenses. It ranges from 2000 to 3000 a month depending upon the number of trades. So we come to next expense as, if you see average monthly expenses over 17.5 months is how much? Average is 2411. 2400 rupees is the average monthly expense of this strategy. So then we come to net profit. Net profit is gross profit minus expenses. Column H here in this Excel sheet. This is the net profit. Even if you see on net profit level also after all expenses, there is no negative month as such. There are few flat months. So let us say what is the definition of flat month? We consider, let's say, less than 3% return on net basis is a flat month. So 1, 2, let me just highlight it green. 3 and 4. We have 4 months in out of 17.5 months, which have a profit of less than 3% on net basis. Still, profit is still in profit above 0%. So between 0 and 4%, we have 4 months. Rest of all the months on net basis are above 4%. There are a few months which are even 14-15% as well. Okay. So on an average in 17.5 months, we have a net return average of 6.84% per month in the strategy, which is Very good for an option writer, actually 6.84% net returns. Let us see how that risk reward ratio of 500 and 1050 is not bad. So out of these 1356 trades in 17 and a half month in this strategy, we have 1011 trades which are profitable. So 1011 into 500, this is the profit. And we have 345 losing trades. So that makes 74.56 to be precise as the win ratio of the strategy. If we see the profit factor also, divided by loss making trades, we are getting around 1.53, which is good. Anything above 1 is good. 1.5 is reasonably good. That means the strategy is profitable in long run. So we can see that this strategy is profitable in long run, consistent, not a single losing month in 17 and a half months. See, when we do the strategy which have multiple counters in a day, there are some strategies like the one I discussed in the first video, which has very high number of trades. Though the profit was even higher than this strategy, around 10% on net basis, but those strategies are difficult to trade emotionally when we do live trading. Those strategies look good on paper trade or in backtesting or on Sundays or after market hours. But when we do those trades in live market, they are emotionally very tough to do. Why emotionally very tough? Because if it's taking 15 trades a day and you get 10 trades continuously in loss, I don't think we'll be able to trade such strategies emotionally unless we are very, very disciplined and we don't bother. We just trust the backtest and we trust the strategy. But we all are not like that. We all are very emotional people when it comes to trading in live market. But this strategy, having 4 trades a day, is not that bad to trade emotionally as well. We can trade this strategy. Like we just saw that out of 4 trades, which is average trades per day, we are likely to have 1 losing trade on an average. Someday we may have 3 also losing trade, but on an average, over a period of long time, we will have 1 losing trade and 3 winning trades a day, right? So I have done this analysis just as a knowledge sharing with everybody. There must be not there are great creators, great strategy makers in TradeTron or other platform. But at the same time, there are some people who are always new and they come for learning. So just it's a sharing with everybody. So you can duplicate this strategy from the description box. I have given the link. You can duplicate in your TradeTron account and you can run the backtest. You can run the forward testing, paper trade. This video is not for recommending this strategy. I don't have any commercial interest also here by making this video or by sharing this strategy. It's all for purpose of knowledge sharing. So if somebody finds it useful, he can deploy in live account, he can make some improvements, he can suggest the improvement to me as well, so that we have a better strategy than this. Fine, guys. So we'll conclude this video. You can, if you like the content, if you like the effort, you can subscribe the channel and you can press the bell icon, because I'll be doing some more videos on different topics related to option writing in coming days. Thank you guys for watching. Thanks a lot.